Energy Fuels Inc. UUUU is trending as online investor communities react strongly to a widely circulated report on U.S. critical minerals policy that has since been challenged and refuted by multiple commentators. The episode sparked sharp debate, with many investors arguing the market initially misread the implications and underestimated how well positioned Energy Fuels remains within the evolving policy landscape. Much of the renewed bullishness centers on the company's strategic acquisition of Australian Strategic Materials, which materially strengthens Energy Fuels' access to rare earth processing technology and diversified feedstock outside of China. Investors are also pointing to robust feasibility study results, which suggest improving project economics and reinforce confidence in the company's long term production potential across both uranium and rare earth elements. This momentum is being amplified by broader market recognition of Energy Fuels' role as a critical domestic supplier. The company sits at the intersection of several powerful secular trends: rising uranium demand driven by the nuclear renaissance, expanding rare earth needs for AI infrastructure and clean energy technologies, and growing national security concerns around supply chain independence. As governments and defense agencies prioritize secure, non Chinese sources of critical minerals, Energy Fuels is increasingly viewed as a strategic asset rather than a traditional commodity producer. From a trading perspective, attention is also drawn to the stock's short float of approximately 16%, which adds another layer of intrigue. Bulls argue that improving fundamentals, policy clarity, or a surprise government related catalyst could pressure short sellers to cover, potentially accelerating upside moves. Bears counter that volatility remains high and that policy driven narratives can shift quickly. Overall, the discussion reflects a market reassessing Energy Fuels not just as a uranium miner, but as a cornerstone player in the U.S. critical minerals ecosystem, one that could benefit disproportionately as AI, clean energy, and national security priorities converge.
So as of Friday, the 30th of January, the stock lost 9.81%. Ultimately, I think up to 20% or thereabout, given the further losses it printed in the post-market session. Okay. So the stock is showing a decent amount of weakness within a longer-term bullish trend. As of Friday, the extrapolation was that the oil prices was going to continue to print at least up till the 19th of February, and before that time, the 40-day moving average is also expected to continue to rise to curtail much of the impending weakness. That is the further weakness that is expected to play out. Momentum is also expected to continue to weaken up till the 11th of February. Then after that, it might stabilize. So we have been able to gather the data from this 4-hour chart, and we have it here on Claude. Okay. Let's see what we have here. Current market context. Okay, price pressure momentums. They tell us what the moving averages are doing, whether they are gaining or losing. So as of then, the 10-day moving average was gaining 63, roughly 64 cents every day. As a matter of fact, all the positions open from 10 days ago all the way to 200 days ago were in profit as of then, even though the stock was down up to up to 16% or thereabout, on that day. Okay, so despite the sell-off of Friday the 30th of January, with a loss not 20% up to 16%, the acceleration metrics, first and second derivatives, remain strongly positive across all time frames, suggesting the underlying trend structure is intact. This appears to be a violent shakeout within an established uptrend. Yes. We also have the market grid. Market grid gives us a range of possible prices. The S's represent supports and the R's represent resistance. So as of the post-market session, it was at 20.79. So that will be, this is where it will be 20.79. It will be S1. Okay, just that. Okay, S2 is not here, not written here. So it will just be slightly below the S2, S1 value. So these are the it has these are the some of them, some of the moving averages. So sorry, some of the market grid prices and their probabilities. Okay, so 24.17 first recovery target, retest or breakdown level. 25.59 previous support turned resistance. Okay, medium term resistance 26.38, 27.16 short term ceiling, 27.87 extended target. And then 21.89 65% probability immediate magnetic level already tested. Minor bounce 22.60 minor bounce zone. Major structural support if selling persists 18.19. And extreme downside scenario 17.91. These are the extrapolations, the $25 for the 3-day moving average, and the 18.19 for the 40-day moving average. Okay. So interpretation, sharp divergence suggests a volatility contraction toward a mean reversion in the 21 to $23 range before next directional move. So this is a trade setup. These are trade setups below now. There's no guarantee that if you apply them that you will succeed. Okay. Entry zone, current area. Okay. Preferred entry on a retest of 21.89 with bullish intraday structure. Okay. Target will be 23.39. That's the probability. 24.19. This is the probability. 25.59 probability. Stop loss will be 19.5 below high target 2. Probability of profitability 65%. Rationale, high price pressure momentum indications that that is what the moving averages are gaining or losing. Yeah, they're all high. Okay, the indicator moving averages will act as magnets on any recovery. 16% short interest creates a squeeze potential on reversal. That day, the Friday's volume, Friday the 30th of January's volume capitulation often marks short-term bottoms. The extrapolation of its 3-day moving average forecast support upside. I mean, the forecast supports upside. Okay, long-term trade setup. No guarantee that this will equally work as well. Okay, phase one accumulation zone 18 to 1, 18.19 to $21.17 current zone. Dollar cost average on any test of $40. Core position 50% accumulation. Phase two breakout confirmation and much more. Your targets will be 27.87, $32. Measured move from base $38. Extension target. Okay, so stop loss daily close below $17 invalidates the structure. Probability of probability of profitable exit is 70%. Rationale 200-day moving average is gaining 75 cents every day with a positive acceleration. Macro uptrend intact. Critical minerals slash uranium thesis remains compelling. AI, clean energy, national security. Strategic acquisition strengthens competitive moat. 200-day moving average at 12.28 shows a massive uptrend cushion, 65% above long-term mean. Short float 16% provides fuel for extended rally. Okay, you can always read this. Summary: extreme sell-off appears technically overdone against strong trend structure. Short-term mean reversion has 65% probability, while the long-term uptrend supported by fundamentals and technical momentum offers 70% probability of significantly higher prices over 3 to 6 months. The 21 to $22 zone represents a high probability risk reward entry for both tactical and strategic positions. Okay, yeah, so see what you make of triple quad U stock, and I will continue to update you. Thank you very much for watching this video.